Back again, still Wednesday, the 16th of July. We've been making a comparison between a bear call spread, which is a credit spread, and a bear put spread, which is a debit spread. I know this isn't the easiest to see, but we had $1.60 that it cost us on our debit spread. There's a $2.50 spread between the two different strikes. So the maximum we could make is the $2.50 difference less what we paid out. So 90 cents would be the max we could make. Down here, our credit was 88. That would be the max that we could make on a credit spread. So the two are very similar up to this point. Now we talked about how we needed to make a forecast, and it's a little bit hard to see this with my mug here. Let me try and make this a little easier. Okay, we had been concerned because we had this little bit of an uptrend here. That's one thing that was a factor against us, right? We'd really rather have a downtrending stock. We had some timing. We went in when we were above our 80 band on our stochastic, and we were above the midpoint line on our MACD, but it did look like it was turning over, and so we decided to trust it. Yesterday, the stock was up a little bit, and I commented that I might very well close the trade if it was real instead of a paper trade. I may or may not have. Okay, but today we have kind of a mixed market. We got a little bit of a bump up from the inflation numbers from PPI. Right now we have kind of a mixed market. The last time I looked, the S&P 500 was up a little bit. The NASDAQ was down a little bit. So kind of a mixed market. Now both trades are up right now because the stock has gone down. The stock is in our favor, so both spreads have moved in our favor. The one that I'm currently showing here is our bear call. You can see I have those two boxes checked. And ideally, I would let this go to expiration. Ideally, I would let this expire worthless and save my two commissions. Let me switch to the other spread here. Okay, so now I have on the debit spread, and you can see very similar what's going on here. It's not showing up with a payoff profile. That surprises me. Not sure exactly why it's not doing that. Nevertheless, you can see that we're in the spot for our max profit. The challenge is, the problem is, we are going to have to spend two commissions to close this trade out, even if it's profitable. So again, for that reason, I would prefer a credit spread, the bear call spread, over the bear put spread. That's our update for today. Tune in tomorrow.